This is Nightly Business Report with Sue Herrera and Bill Griffin.
On edge, impeachment talk and trade concerns loom over the market as investors closely watch developments in Washington.
On the menu, Beyond Meat partners with the maker of the Big Mac in a big test that could reshape the faux meat industry.
Safeguarding your money. Older Americans with trillions of dollars in assets are the perfect target for fraudsters, but there are steps that you can take to protect your wealth. Those stories and much more tonight on Nightly Business Report for Thursday, September 26th.
Good evening, everyone, and welcome. We begin tonight with the stock market, which has been laser focused on our nation's capital. Trade has been a looming source of uncertainty, and this week, a cloudy political outlook was thrown into the mix. Today, the two combined. Stocks drifted lower after a release of a whistleblower complaint that has sparked an impeachment inquiry against President Trump. Then came a report that the U.S. is unlikely to extend a temporary waiver that allows U.S. companies to sell supplies to the Chinese telecom giant Huawei. So by the close, the Dow Jones Industrial Average fell 79 points to 26,891. The Nasdaq was down 46, and the S&P 500 slipped 7.
Traders did spend much of this day watching those developments on Capitol Hill. The acting director of national intelligence testified about that whistleblower complaint that alleges President Trump abused the power of his office. Ilan Mui has our story from Washington.
It was another dramatic day in Washington as the acting director of national intelligence testified before lawmakers amid dramatic new allegations surrounding President Trump's phone call with the leader of Ukraine.
Our president sacrificed our national security and our Constitution for his personal political benefit.
Just minutes before the hearing began, the House Intelligence Committee released a redacted version of the whistleblower complaint at the center of this controversy. It said that White House aides were deeply disturbed by the call and moved to lock down an electronic transcript in a special server with code word level security. It also said administration officials in Ukraine worked with that country's leaders on navigating the president's request. Lawmakers then spent about 3 hours grilling acting DNI Joseph McGuire over why it took him so long to hand over the complaint. McGuire argued the law didn't allow him to.
I realized the importance of the matter that is before us this morning, and I thought that it would be prudent for me to ensure that, in fact, it met that statute before I sent it forward in compliance with the Whistleblower Protection Act.
President Trump lashed out over Twitter, calling the allegations a Democratic scam, a fantasy, and another witch hunt. On Capitol Hill, meanwhile, Republicans dismissed the allegations.
It was a nothing burger for me.
While Democrats had tough talk of their own.
This is a cover-up.
One thing both parties can agree on, they want to hear directly from the whistleblower. For Nightly Business Report, I'm Ilan Mui in Washington.
House Speaker Nancy Pelosi today also said that the impeachment inquiry will not derail work on other issues, such as legislation to lower drug prices as well as trade. Pelosi said the House is moving ahead on the new NAFTA, otherwise known as USMCA. In the Senate, lawmakers passed a short-term funding measure. That vote averts a government shutdown after the end of the month. The House passed the stopgap bill last week, keeping the government open through November 21st. That legislation now goes to the president for his signature.
A new report says that the U.S. economy grew at a modest 2% rate in the second quarter. That was in line with estimates. Consumer spending, as we know, was strong, but business investment contracted more sharply, marking the steepest decline since the end of 2015. Corporate profit growth was also tepid over that period of time. So economists say the weak business spending and profit growth could raise doubts eventually about whether consumer spending can continue at its current pace.
Home buyers are back in the market, signing contracts to buy existing homes. Pending home sales rebounded in August, rising 1.6%. The gain reversed a slump in July and was likely fueled by falling mortgage rates. A separate report shows that the labor market remains robust, despite the marginal rise in weekly jobless claims. Jobless claims are a measure of the number of Americans filing applications for unemployment benefits and remain historically low.
The vice chair of the Federal Reserve said today that inflation expectations are right where they should be. Economists are interpreting those remarks from Richard Clarida to mean that he does not see a pressing need to cut rates any further in order to stimulate the economy. As you know, policymakers cut rates last week and at their July meeting. Fed Chair Jerome Powell has characterized those cuts as insurance against the risks to the economy.
A month-long federal investigation into the two crashes of Boeing's 737 MAX plane has called into question some of the assumptions used by Boeing and by regulators. Phil LeBeau is in Chicago with an update on this ongoing story for us. So, Phil, what exactly did the NTSB say in its report?
Well, they had two things, Sue. They first had their report on the accidents, and that's where the assumptions come in. When they look at the two accidents involving Boeing 737 MAX, they found basically that the pilots were in a state of chaos as the planes were pitching up and down. The pilots thought they were reacting a certain way. In the report, the NTSB says the crews did not react in the ways Boeing and the FAA assumed they would, meaning that Boeing and the FAA assumed that when the airplane would react with the MCAS software, that the pilots would react concurrently a different way. And that did not happen. So as a result, they have made several recommendations. That's the second part of this, recommendations that they make changes in the future in terms of how pilots are interacting or made aware of things through alerts in the cockpit.
Does this report in any way alter the timeline of when we get the 737 MAX back in the air?
Good question. I'm not sure it does. At this point, Boeing is maintaining that it expects to have the MAX flying by the end of the year. But Bill, we're already almost into the fourth quarter, right, and that means you've got to get recertification. You've got to get not only the FAA, but other regulators around the world to sign off on it. And then you've got to get these planes back up in the air, which is not something you can do overnight. That's going to take at least 20 to 40 days, and that's if they're really moving fast.
The other big story you've been following for us, the General Motors and UAW strike.
Right.
There were a lot of reports late yesterday that the two sides were getting closer to a tentative deal. But what are you hearing?
Well, it's not imminent. That's the bottom line. Are they making progress? You bet. They are at the negotiating table, the main table. This is where they are hashing out the big issues that are at the heart of this. And we're talking about job guarantees, the use of temporary workers. So they are making progress, Sue. But to call it imminent that we will see a deal, let's say by the end of tonight, everybody that I've talked to has said, no, relax. It may be that we don't see something until perhaps the end of the weekend.
Quickly, are we at the point now where we're going to start to see this at the dealerships hurting sales or anything like that?
No, we haven't seen it yet. We compared sales. We went to LMC Automotive. Sales for the first week of the strike with the same week of September last year, they actually were slightly higher.
Phil, thank you so much. Phil LeBeau in Chicago.
You bet.
Time to take a look at some of today's upgrades and downgrades. We start with shares of Whirlpool. They were upgraded to overweight from neutral at J.P. Morgan. The analysts expect shipments to show modest growth over the next year. Price target now $172. That stock rose 3% today to $154.84. Square was upgraded to outperform from market perform at Wells Fargo. The analyst cited strong fundamentals. He called the stock's valuation attractive at these levels. Price target is now $80. That stock was up nearly 4% to $60.80.
Boston Beer was upgraded to outperform from market perform at BMO Capital Markets. The analyst cites strong demand for the company's hard seltzer product called Truly. The price target is $410. The shares gained more than 4% to $363.93. And Target was named a top pick at Cowen. The stock is up more than 60% this year, and the analyst says it could go even higher. The price target is $130. Shares fell a fraction, though, to $106.29.
5G, as you may know, is the next generation wireless network. It's also considered the next big thing for the technology industry because it promises to bring much faster download speeds and better communication between connected devices and in everything from smart cars to smart factories. But how long is it going to take to bring 5G to you? Three of the biggest players in that industry gave an update on that today. Here's Josh Lipton.
5G, the next generation of cellular technology, is coming, promising to bring super fast wireless speeds to people, delivering data 10 times or even faster than 4G. 5G also cuts down the lag time when data is sent or received. That will improve the reaction time of cutting-edge technologies like self-driving cars. Technology executives see 5G used to improve a number of industries.
My mom was recently in the hospital. I spent a week coordinating moving big files from each healthcare provider. Or you go to a remote surgery. Internet 4.0, picture walk in a factory and it's wireless. Think of all the wires, the cables, and what it could mean to safety and maintenance. That's one that they're working on. A retail store. Okay, if I could really look at all that video real time, I could stock shelves differently.
5G is so critical that it's now become the subject of intense national interest. And one question that's frequently raised is China ahead of the U.S. in this 5G race. Qualcomm's CEO acknowledges that the Chinese are moving fast.
They're going at it with a lot of intensity. What is different this time around is the speed to which the Chinese are deploying relative to the leadership that may be established other places. For example, traditionally in cellular, it would launch in Verizon or maybe Japan, and then it might be several years before you get a tremendous amount of intensity with deployment in China. Not the case this time. You're seeing a lot of deployment intensity early on.
Here in the U.S., a 5G rollout will be gradual for companies and consumers. Analysts estimate mass market adoption of 5G mobile devices doesn't come until 2021. One reason why Verizon's CEO says that he doesn't think his company will realize significant revenue from 5G until 2022. For Nightly Business Report, I'm Josh Lipton, San Francisco.
Still ahead, C-suite shuffle. Does a CEO's exit create opportunity for investors?
Micron Technology today warned that first quarter profits are going to fall below Wall Street targets. The chip maker said that despite a pickup in memory chip demand, trade uncertainty is still an issue, especially after the Trump administration blocked access to Huawei, something that we mentioned at the top of the broadcast. Huawei, as you know, is the world's largest telecom equipment maker and Micron's single largest customer. Shares fell after hours tonight in its earnings report in the initial after hours trading.
McDonald's is known for its burgers, but it may soon be known for its plant-based meat. The world's largest fast food chain is partnering with Beyond Meat to test the new product. That sent shares of Beyond Meat soaring 11%, while McDonald's was pretty much flat. And this get-together really could be a game changer for the faux meat market. Kate Rogers explains.
As consumers continue to clamor for alternative meat options, the biggest player in the game is getting in on the action. McDonald's announced it will be testing a PLT, a plant lettuce tomato burger, at 28 restaurants in Canada over the next 12 weeks. The burger will be made with a Beyond Meat plant-based patty. Beyond Meat also has partnerships with Dunkin', Tim Hortons, and KFC locations in the U.S. and Canada. Analysts say it could take some time before McDonald's attempts to tackle a nationwide rollout for one major reason: supply chain capacity. In fact, one analyst from Stevens said an alternative chicken product in the U.S. would be a more likely nationwide launch in the next 2 years. Beyond Meat CEO Ethan Brown said earlier in the summer the brand has learned from past supply chain hiccups.
We went through a pretty tough supply situation about 2 years ago and a little bit over last summer, where consumers really surprised us with the level of interest in the product and plant-based meat that we were creating. But we learned from that and were able to invest not only in facilities but people.
But customers are hungry for the option. One online petition at change.org has more than 225,000 signatures urging McDonald's to bring on a meatless menu edition. CEO Steve Easterbrook has said the company is watching the space closely and analyzing what adding a plant-based option would mean for restaurants.
You've got to obviously segregate the tools you use and the grills from beef products, because some people clearly are purchasing it because they are not beef eaters. So we know there's complexity. The question is, will the demand make it worth absorbing the complexity, because it will drive the business? I mean, we had a similar discussion maybe 4 years ago around all-day breakfast, where it certainly adds complexity to the operation, but the demand was sufficient that we want to find a way to absorb that. So it's something we're certainly taking a good look at.
In the meantime, McDonald's Vice President of Global Menu Strategy said this test allows us to learn more about real-world implications of serving the PLT, including customer demand and impact on restaurant operations. For Nightly Business Report, I'm Kate Rogers.
Peloton hits resistance in its Wall Street debut, and that's where we begin tonight's market focus with the home fitness company opening for trading at $27 a share. That was below the IPO price of $29. Peloton has a market value of nearly $7.5 billion. The CEO today said it's all about growing right now.
We are investing, and we're in investment mode, and we are prioritizing growth over profitability right now. We're hiring the instructors, we're opening the stores, we're doing the logistics. All of that is obviously expenses out in front of the revenue. So we call it investment stage, and we think it's disciplined investing.
But it was a rough opening for those shares. They closed down 11% today to $25.76. Meanwhile, cruise line operator Carnival beat earnings estimates, but gave weaker than expected guidance due to a jump in fuel prices. The company says that there were a lot of factors at work.
A number of noise things. We had hurricane short-term disruptions in itineraries. We had Arabian Gulf disruption in some planned itineraries. We had to, cancel people, rebook them in shorter periods and so on. And so a number of noise factors that led us to, primarily because of the spike in fuel prices, to lower guidance a little bit.
Carnival shares fell 8.5% to $43.95. And it's been a bumpy road for Uber and its investors after going public a few months ago. But the CEO today said that he believes the company's expanding services has it on the right road.
We take a hard, critical look at what we're doing. We think that the rides business and the environment around the rides business globally is constructive. We think that we can grow, but we do think that we can take costs out of the business, both on the rides and on the eat side, and build for the long term, but build responsibly.
Uber was down a fraction today to $31.57.
ConAgra beat analysts' expectations thanks to a strong showing from its recent acquisition of the packaged food company Pinnacle Foods. ConAgra also saw strong demand for its Slim Jim snacks and the company's frozen food brands like Banquet and Healthy Choice. So the shares rose more than 3.5% to 31 even. Discovery is teaming up with Amazon by launching a new streaming app called Food Network Kitchen, offering viewers live and on-demand cooking classes with celebrity chefs. It's part of Discovery's strategy focusing its streaming content on viewers passionate about cooking.
What this isn't really an entertainment service. It's a functional product. No one needs to be alone in the kitchen anymore. Live cooking classes every day, almost 1,000 classes on demand. Martha Stewart, Ina, Bobby Flay, everyone that's on our network is doing cooking classes. They're super excited about it. And we have over 150 other chefs.
Discovery was off about 1% to $26.46. Amazon dropped 1.5% to $1,739.84. And as pressure mounts on the vaping and e-cigarette industry, the CEO of Philip Morris said he believes nicotine products must be regulated through the FDA and that vaping will be regulated within the next 2 to 3 years.
It is a very emotional issue, as we know, because it involves use by teenagers and vaping. And this should be the priority by everybody to address, because this is a serious issue. Say end of 21, 22, I think what we will see is a highly regulated, in terms of product, marketing, and other restrictions category.
Philip Morris was up a penny to $75.29.
Well, it's been a rough week in the C-suites. The CEOs of WeWork, eBay, and Juul all stepped down just this week, and they joined more than 1,000 other U.S.-based CEOs who have departed this year. Is that a good thing or a bad thing for investors, though? Are CEO departures a red flag, or can they represent an opportunity for those investors? Joining us with his thoughts tonight, David Nelson. He's chief strategist at Bell Point Asset Management. Great to see you. Welcome back.
Thanks for having me.
I know you were an avid numbers cruncher, but how much does the person sitting in the corner office affect your investment decisions?
Well, it's certainly a big part of it, but sometimes you can't avoid making the investment. Certainly, Mark Zuckerberg was certainly under fire for Cambridge Analytica and other issues as well that I have. But when I look at the numbers, this is a company that's top line is growing at 20%, forward PE around 20, a PEG ratio of around 1. Hard to avoid. Not often are you going to find. So sometimes you have to take that into consideration, watch the CEO, watch what happens, but sometimes you can't avoid being in the name.
Now, When you look at a stock, you say sometimes you can't avoid being in the name, but how much does the CEO's performance, say if there is a crisis or if there is an issue, how much does his or her performance influence your decision to either buy or not buy a stock?
Well, certainly the CEO can make or break the company. Obviously, we say that, but not everybody's going to be a Steve Jobs. Those are pretty rare events. So in the end, I do come back to the numbers. But what I look for is red flags in a CEO. For me, a red flag is buybacks. Constantly.
You're not a big fan of those, are you?
I'm not a big fan. Certainly, some companies like an Apple, which have so much money, maybe they have to buy back stock. But for most CEOs, it's code that they're just run out of ideas, and it's the best way to make their bonus.
Bob Iger's very popular as the CEO of Disney, but you fault him for those buybacks that they do.
If you go back to a certain time when they realized they had a problem with streaming, I think they spent over the next several years, they spent about $26 billion in buying back stock. Back then, they could have probably bought Netflix for that same amount of money. Here they are trying to get into the streaming business, so maybe that wasn't an efficient use of capital. He eventually got it, and they're into streaming right now, and they'll probably be a formidable competitor.
What about the incoming CEO? For instance, we saw some CEOs step down this week. Are you influenced in buying a stock depending on who is put in the new position?
I need some food on my plate. I need to watch what happens. I need to see what they're going to do with the company. I'm not going to buy just a personality. I'll probably wait a quarter or two, see what they're going to do, how they're going to shake up the industry, how they're going to shake up the company, and do they actually fix the problems? And a lot of the problems are often in the board because they're the ones who signed these guys on in the first place.
You mentioned Mark Zuckerberg, one of the founders of Facebook, who has continued to be the CEO. Adam Newman, who was the co-founder of WeWork, just had to step down this week. The issue of an entrepreneur who then continues to try to run the company. The Google boys, they even had to bring somebody in to run that company for a time. Are you a fan of an entrepreneur, an Elon Musk, for example, who founds a company and then remains as CEO?
Look, I'm a fan of the vision. And I think there's a role there, but at some point, it's an operating entity. And you just had on the CEO of Peloton. It's probably endemic of what's going on in IPOs right now, the focus on growth at the expense of profitability. Right now, Wall Street is saying no to that. They want to see some food on their plate.
That's for sure. David Nelson with Bell Point Asset Management. Always good to see you.
Hey, thanks for having me.
See you. And coming up, older Americans are becoming more vulnerable to financial abuse, but there are steps that you can take to stop it.
Here's a look at what to watch for tomorrow. Reports on personal income and spending and consumer sentiment are due out. Consumer spending has been a driving force behind the economy. Durable goods orders will be released, giving us a peek into spending and on expensive and longer-lasting items. And a number of Fed officials will be speaking on the economy. So lots to watch for on Friday.
6 Democratic senators today urged retailers Walmart, Walgreens, Rite Aid, and Dollar General to stop selling all tobacco products. These senators in their letters cited the current epidemic of e-cigarette use by teens and the recent outbreak of vaping-related illnesses and deaths. And speaking of which, the Centers for Disease Control just today said a 12th person had now died, and the number of vaping-related cases has risen to more than 800.
According to a survey released today by insurer AIG, nearly half of older Americans are managing their own finances, but doing so could be putting them at risk for financial abuse. Joining us now to discuss that is our senior personal finance correspondent, Sharon Epperson. Sharon, it's always great to have you on the program with us. How widespread is this problem?
This is a serious issue. As we're seeing a rise in older Americans, we're seeing a rise in incidents of elder financial abuse. 3.5 million incidents are happening every year. And when you think of the cost of at least $3 billion, according to some studies, others say up to $36 billion when you look at all the different fraud and scam that are out there. And the average older adult loses about $34,000. If they know the person who was involved, it could be as much as $50,000.
Wow. So what do they do? What can they start to do to protect themselves?
Well, one of the first things, because they're not consulting with anyone in terms of their finances, is to designate a power of attorney. So many people, let alone seniors, do not have a power of attorney. That's an important person to have. If you don't even have that yet, start finding someone that you trust that could get copies of bank statements and important financial documents. So you have someone that's doing a double check on what you have. And then don't add that person, though, as a joint owner to the account, because as long as you're capable to handle your finances, you can do it. Having a power of attorney doesn't mean that you're not going to take care of your own financial responsibilities. But if you have a joint owner on the account, then that person can go into the bank and say, I'd like to take all the money out.
Now, what about the scams that are out there? I know that there are some that, we hear about all the time, and there are others that people are not aware of that are scams.
Well, here's one thing. A lot of seniors believe, 81% according to the AIG study, believe that someone that they know would never hurt them financially. The reality is many of the financial schemes that come out of there are from someone that you know, someone that you think you trust. So one of the first things is to think about people who come to you, family members that might ask you to change your information on an account, family members that come out of the blue. When was the last time you saw them and now they want to come and help you? Or there's a pressure from a family member or someone that you know to be the power of attorney. So those are some of the red flags. But what I found also interesting in the AIG report were some of these popular scams that I hadn't thought of, and that is someone calling to say that they're the grandchild, and so now they want to have that money. The lottery scam, you need to pay taxes, you just won the lottery. But here's the one I wasn't familiar with. Online dating. Online dating scams of seniors are on the rise. And people get involved in these relationships, yes, and are taken advantage of financially. So really interesting stuff in this AIG report, very sobering and scary stuff too. But the bottom line, have the money conversation. That's what we always talk about.
That's exactly
and definitely
right.
have that with someone you trust.
Thanks, Sharon,
Sure.
as always. Sharon Epperson.
My pleasure.
And that is Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. See you tomorrow.